Hey everyone, I'm just doing a quick sound check. You got it. Thank you, Dragonfly. Awesome. Yeah, we'll get started here in just a few minutes. Market's continuing a reasonable meltdown here, which is very interesting. Lot to talk about today. Crazy shit going on, folks. So we'll get in here very, very soon. And we're down just about 2% on the futures. I'm going to put the futures on the screen so you can watch that while I'm finishing getting the last couple things, getting the Runa out, and getting ready to rock and roll here. All right, folks. Enjoy. I'll be back in about 6 minutes. Throw some music on real quick. That's hilarious. We are starting here in just a couple minutes here, folks. Give me just a minute. Hey everyone, it is time to get going on this stuff. There's a lot to unpack. And one of the things I noticed just looking, we've already done 9 billion shares of total volume across the exchanges right now. This is going to be a historic day in volume. There's just going to be a lot of things that we're going to have to try to get through here today. Brokerages are shutting down everywhere. And let me just kill one thing here, 1 second. Yeah, so there's just a lot of things going on. Just about every brokerage firm on the street has had some sort of issue today just due to this massive volume. And I'd like to, I'm kind of watching to see when Powell comes up. I don't know, how do you guys feel? Do you want to listen to what he has to say and watch this together? And watch 10 minutes of regurgitation of the same thing, or what do you think? Let me know what you think there. Yeah, it's Michael. The guy from The Big Short, Michael Burberry, is long GME from last fall, 1.7 million shares. So this guy is making some size. I don't know where he's getting out, but it doesn't look like there's a seller to be found right now. And we'll talk about that. And it's interesting. Those of you who follow me on Twitter. No, I put out that our models actually bought, I'll show you, bought GME at $4.25. Let's see here. I think, yeah, here comes Powell. Let's put this over here real quick.
Monetary policy goals that Congress has given us. Maximum employment and price stability.
Hang on, folks. I can actually spin forward here.
To achieving the monetary policy goals that Congress has given us. Maximum employment and price stability. Since the beginning of the pandemic, we have taken forceful actions to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. Today, my colleagues on the FOMC and I kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates and our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. The path of the economy continues to depend significantly on the course of the virus.
Yeah, I hear you. We're gonna listen just for a couple minutes of this, and then I'll come back on. And I hear you, but Paul's not gonna. Yeah, let's just watch this. I think it's worth the watch. It's probably 6 or 7 minutes, and I can pause and spin back and do all that stuff with this. So let's just go ahead and watch a few minutes of this. I want to have the context. It's important for me to understand to be able to comment. Okay, I will also turn it up. Okay. Here we go.
Resurgence in recent months in COVID-19 cases, hospitalizations, and deaths is causing great hardship for millions of Americans and is weighing on economic activity and job creation. Following a sharp rebound in economic activity last summer, the pace of the recovery has moderated in recent months, with the weakness concentrated in the sectors of the economy most adversely affected by the resurgence of the virus and by greater social distancing. Household spending on services remains low, especially in sectors that typically require people to gather closely, including travel and hospitality. And household spending on goods has moderated, following earlier large gains. In contrast, the housing sector has more than fully recovered from the downturn, supported in part by low mortgage interest rates. Business investment and manufacturing production have also picked up. The overall recovery in economic activity since last spring is due in part to federal stimulus payments and expanded unemployment benefits, which have provided essential support to many families and individuals. The recently enacted Coronavirus Response and Relief Act will provide additional support. Overall, economic activity remains below its level before the pandemic, and the path ahead remains highly uncertain. As with overall economic activity, the pace of improvement in the labor market has slowed in recent months. Employment fell by 140,000 in December, as continued gains in many industries were outweighed by significant losses in industries where the resurgence of the virus has weighed further on activity. In particular, the leisure and hospitality sector lost nearly 500,000 jobs, largely from restaurants and bars. The unemployment rate remained elevated at 6.7% in December, and participation in the labor market is notably below pre-pandemic levels. Although there has been much progress in the labor market since the spring, millions of Americans remain out of work. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. The pandemic has also left a significant imprint on inflation. Following large declines in the spring, consumer prices picked up over the summer, but have leveled out more recently. For those sectors that have been most adversely affected by the pandemic, prices remain particularly soft. Overall, on a 12-month basis, inflation remains below our 2% longer-run objective. While we should not underestimate the challenges we currently face, several developments point to an improved outlook for later this year. Sufficiently widespread vaccinations would enable us to put the pandemic behind us and return to more normal.
Okay, I've got to pause. I've got to pause this. This is way too boring. I agree. I can't handle it anymore. Okay, back on screen, folks. Thanks for your patience. Listening to this broken record that they continue to do, we're going to hear several things. I will watch that later. But we're going to hear several things from them, which is the same things that we've been hearing. Excuse me. You're going to hear they have lending powers, not spending powers. I've been talking to you folks about the fairy godmother. Now we have Janet Yellen as Secretary Treasurer. They're going to spend and do everything they can, but they've blown this thing up, maybe, and he does look scared, and I think he should look scared. I've been talking to you folks for the last several weeks that our short-term database is getting pretty stretched out. I'm not completely convinced at the moment, based on intermediate trends, which we'll go through here in a few minutes, that we're at the breaking point. But this big spike in volume is very interesting, is happening today. So I'm looking forward to, after the close today, and letting the dust settle, and when I do my analysis later tonight. And I appreciate everybody being really patient. I've had all kinds of stuff going on personally that have kind of disrupted the channel in the last few weeks. So I'm trying to get things are getting closer back to normal. So that's a good thing. But the perspective that what's going on here is really interesting. And I was going to play this. I recorded something. I posted it it was January 2nd of last year, and it was me actually having a discussion with somebody internal here, and I recorded it, and I turned it into like a little podcast. So it's a 7-minute clip. I think I'm going to put it on the channel because what I was talking about there in this little clip is that this came out of some of the things that we're seeing happening in the world right now. So we all know that we had this, obviously the lockdowns, all the stimulus checks and everything, and everything that we're going to talk about, GME and AMC and some of these other stocks that have blown up. But there's the general view of what I'm seeing right now is that there is a short-term rotation going on. I mentioned in last night's video that we saw, we've actually seen 3,500, thanks Abbey Road, we've actually seen 3,500 sell signals in the last two sessions on WaveTech. And, I know I get criticized for doing sales pitches, but that's the only way I can really help you guys. I can talk and you guys can interpret, you can do all kinds of stuff, but, getting the platform and being able to watch 16,500 symbols, I had the opportunity, I might be online here, I haven't seen who is online, but talked to one of our international clients. Last night we did a private Zoom meeting one-on-one, working with the product. It's just amazing. My goal really is to empower you people, and the any monies that come in this channel, we're actually in the process of redoing the entire platform. So, you're supporting a really, I think, special effort and trying to help everything. So I appreciate everybody that does that. So one of the things that but going back to this conversation I had, one of the things that I was seeing, if we go back to Robinhood started this. Robinhood started the no transaction fee side of the business. Charles Schwab in October of 2019 came out and dropped all their ticket fees. 2 weeks later, they announced that they were buying TD Ameritrade. I think a week or so, all of this within a 30-day period. They also announced there was going to be fractional shares. Now, this is in this podcast, but I've been saying for a while that investing used to be for someone, now it's for everyone. And with fractional shares and things, there's availability here. And one of the statements I made is that I thought the volume on the markets would quadruple plus in the next 6 months to a year. It's on the tape. I'll put it on the channel. And that's exactly what happened. I mean, we're looking, there's a possibility we could do maybe 12, 14 billion shares today. Like I said, all these brokerages are blowing up. I've been doing this a long, long time. I remember when 40 million shares was a big day, a big day. Now we have many stocks that trade way more than 40 million shares a day, right? So you're seeing this. I've watched this evolution of the markets. I've always been an early adapter of technology. That's just been my history. I had a computer on my desk in 1980. It was an Apple II. And I had VisiCalc. I was doing spreadsheets and doing electronic calculations way back as early as pretty much you could. And, this has actually driven my entire career to this moment. And, I just tell you that this thing is not done. This investments, fintech, and a lot of elements in that space are just going to continue to expand. And I ultimately think, and we'll cover Bitcoin and we'll talk about everything that's going on here today, but I really think that what we're seeing here is a complete shift. It really is, maybe the economy or the world 2.0 or the Great Reset, because now all of a sudden everything's being revisioned and moving forward very, very quickly. I mean, even the companies like Zoom and the things that they're doing with the ability which to, all of us to get together in these big meetings. I know those of you, I'm sure Tony Robbins is a very popular guy. He just did a virtual event that he had almost 1 million people in a virtual event. I think it was 882,000. So I hate the idea. It was kind of weird in a lot of ways. I watched little bits of it, and I would tell you that I hope that we get an opportunity. I want to get this community together in a big room. I was talking to several people that I've met through the channel around the planet, and I really want us to be able to collaborate and get together. And so let's get to the markets. I know you guys don't want to hear about this. So we'll get to the markets here and dig in. But I just this is what's going on right now is the beginning, not the end. These brokerage firms there's going to be massive amount of IT spending. All this stuff is going to happen. So continue to to go on there. So let's get into the markets and take a look at stuff. And now we saw the futures are now down 2.17%. They're sort of kind of bouncing. What was? Let me just see what the low was. The low on the futures was 49. We're trading 60, so we bounced about 11 handles. So we're seeing a little bounce in this thing right now. But let's go over and let's start looking at some of these things. Now, in last night's video, I talked about the potential of us going down to the 21 period moving average and maybe ultimately down to the 40 period moving average. So it was 37.38 was the number that was out there the other day. It's still there. It's 37.37. I think 2 videos ago I did talk about that. And hang on one second here. I did talk about that in 2 videos ago. And I think what we're going to see here is a move down to the 40 period moving average. The PPMs are all rolling over. I've been talking about their lack of momentum for literally probably the last couple of weeks. There's a term that I use that was an old floor term that we used to use a lot, is called the VIG. There's no VIG in this market. So markets were printing new highs, and it was just, you could just feel the air. And you know, you can just feel there's something going on here. And I talked about all of this stuff both in last week. I remember on the live stream I talked about the November 4th on the election, the 5 gaps in a row, and then once the inauguration happened, we saw this again, but we didn't see the enthusiasm and that bid that showed up in the markets, the magical bid. I did a video on this. Did not show up this time. In fact, it's gone at the moment. I don't think there's anything that Powell could have said, anything he's going to say that's going to save this market at the moment. So you have to ask yourself, you know, where do we go from here? You know, I think I mentioned in last night's video possibility of maybe at least 5 to 7% decline. We're going to go through some of the charts here in a minute, but I'm just setting this thing up so I can start to talk a little bit more about what's going on from a structural standpoint. We'll get into all of this here in a minute. So we're on the daily graph. As we go over and we go to the weekly, and I'm going to bring up some of these numbers here. And as we look at the market grid for the weekly, what we're going to see here is that we're getting down to S3 is 3760, so we basically printed an S3 weekly. If we look at the top end of this, 3870, we did an R1 S3 so far this week. And if we just purely look at what's going on with the PPMs over here, they're all starting to fail on a weekly basis as well. So we're starting to look like we're heading maybe toward the 21-week moving average. We still have to get through the 10-week moving average. That is that 37 number. It's also the 40-day moving average we were just looking at. That's going to be your key pivot point. So 30 handles lower from here, we're going to find out what this market's made from, and that's something I'll be watching on the channel very closely. And I agree. Listen, when this thing goes and everybody capitulates on this market, you could see a really, really big move. Now, other thing I've been mentioning as we talk about, sorry about that. One of the things I've been mentioning on the channel is just that anniversary of the collapse last year. It's interesting that we're getting a selling right now, and I mentioned this on the channel before, is that last year on 121, started on January 21st last year, we started seeing massive amount of sales orders coming in. Our institutional clients, I didn't know retail folks like you folks now that are using our products, but our institutional customers were calling me going, hey, Bob, what's going on? Why are we getting all these sells? You know, the market's at an all-time high. And, I just went, there's a lot of internal patterns breaking down. And so what we're seeing here then is is this deterioration starting on the short-term market. Last year it was much more significant. It was on the intermediate or the longer-term trends that started to break down. And we started to see massive selling on the first week of February and the second week of February as this whole COVID thing was starting to come into focus, but we were already selling this. Many of our strategies were already 40 to 60% in cash in early February. And so we know what was about to happen in hindsight, right? But these annual events, when you get to this anniversary, people think about all this stuff. So, we could easily, just looking at this chart we have on the screen right now, we easily could go to let's just call it, we could easily go to the 21-week moving average and ultimately maybe even set up a configuration that would set up over the next several months of the heading toward the 40-period moving average. Now, listen, don't think I'm trying to get. Okay, I just want to come full screen because I want everybody to look at me. This is not a political statement, but this administration is already screwing up so many jobs, and people are already losing faith in within 1 week of this thing. I'm just telling you, people. I've seen guys go, "Oh, you're watching too much Fox." I actually don't. I actually read the numbers and and watch the numbers and what's going on, and things are starting to come apart very quickly, and we're going to see, the 4,000 COVID deaths per day, and Joe Biden orders 200 million vaccines. Well, hey Joe, they're all the vaccines are back ordered. So when are they going to get there? So it's just all it's the same thing. Listen, it didn't matter whether Trump was president or who the president is. The government is going to tell you what they think you want to hear. Okay, so that's all you're seeing there. Not that they're not trying. I'm not saying any of that stuff. So I'm just saying this is not, this is a tough world we're in. So, just know that that's where I'm coming from on this. Okay, I'm just telling you, this is going to be a shit show. Like everybody knew it was, So anyway, it's hard to stay. Really hard to stay quiet on some of this stuff. I don't know if you guys watch Dave Portnoy or follow him on Twitter, but he went on a rant on some people attacking his company that I just was classic. I'm impressed with that guy standing up for himself, for his business, for what he believes in. I just want. Yeah, listen, man. You folks know, you should know this, that I'm not a bullshitter. I'm not a hypester. I'm trying to give you really good quality information, and this market is pressing down. Since I started talking, we're now down 2.5%. I guess I said 37.37, and they want to print it today. We're at 37.51. That is a new print low for the days, and obviously our buddy Mr. Powell is talking, and there's nothing he's going to be able to say to get ahead of this thing. I'm sorry, it's just not going to happen. And so I just wanted you to know this. Nothing. People, I do have views. We all do, right? But just know that this is being driven by what I'm seeing here. And we're all of a sudden are getting close. Now that same number, that 37 number, these numbers update real time, is now 37.35. So the 10-week moving average recalculated real time was 37.37 literally 4 minutes ago. Now it's 37.35. So that's kind of, that's how fast this thing's moving and things are changing. But we're down 97 handles now. We're down 337 handles on the composite, down 624. Maybe we got our first 1,000-point day coming just in celebrating the upcoming anniversary. So let's take a look at let's go all the way out to the monthly. Let's start to get a little better perspective on what's going on here. And I think this will be important to actually take a look at, because this slows it down. So when I do my analysis, I don't know how you folks do it, but I always do even a bottom up, which is daily, weekly, monthly, or a top down. We start at the longer term trends. But what happens as you change the time increment, and in our software, I talk a lot about multivariate trading. So we can build portfolios in our environment that trade the same symbol on 3 different levels. So we're trading short term, intermediate, and long term. And what this does, it gives us the ability to play into different elements of the trend from short to long term. And so when we get out to the monthly chart that we're looking at now, everything slows down. I call it's like slowing down, the frequency. So the frequency of bars, if I put up a 1 minute bar, it's all over the place. And as we go all the way out to a 1 month bar, it actually, as we get out to the 1 month bar, it slows it down to as slow as possible. So when we take a look at this pattern that's on here right now all of a sudden we see a much different picture. But we are still seeing the PPMs. A PPM 1 is at a plus 3.59. What that tells us is that the major support right now at 33.58. I realize we're trading 3,700. That's 400 handles lower, but that's your major support line, and that's going to be jumping. Let's just see what the rate of change is here. That number is jumping at 130 points per month. We are on January 27th, so literally when we come in next Monday, we're going to have a new calculation, and it's going to be 120 points higher. So that number is going to be 34, we'll call it 3480, so 3,500. So there easily could be a move down to around the 3,500, probably more likely into the range that I'm talking about here on the, if we go over back to the weekly, what we're talking about here is the potential to get down to that 21 week moving average at the 35.72 level. So that's somewhere between 35.72 and 3,500 is probably going to be at least the initial low of this thing. And this will be only confirmed if we can close under that 10-week moving average, which is 37 right now, 37.36. We'll see how this plays out. That's what I'm going to be talking about on the channel from that standpoint. So let's go to the next level and start to look at, let's go to the NASDAQ here. Start to look at, let's go all the way back to this and go to the daily. So let's start off here. One of the things that's happened, those of you that have been watching the channel, you know about this market grid thing that I run. That's the lines that are around. These are not Bollinger Bands. They're the market grid, which I developed. And it's a volatility calculation, not a standard deviation calculation like in Bollinger Bands. And so we're looking at it, penetration. If we look at the NASDAQ, this is interesting because I talked about this number in last night's video, is that we're looking at the 10-day moving average. 13,181 is the 10-day moving average. Well, we've blown through that. We're now heading for the 13,005 level, and the potential going down to 12,798. Now, I mentioned some of these numbers just briefly in the last couple of videos, but once again, we now have the potential. If you recall, this is interesting. If you recall, last week, I told you, probably on Monday's video, that we had an RXT sell on the NASDAQ. We closed above the RXT number, 13,221. The close was 13,361. We spiked higher, now we're lower, and we usually will go to at least the S2, possibly S3. So S2 is 13,079 on a weekly. We've been down to 13,104. It's actually that, yeah, we're bouncing just a little bit. We had a 13,104 low, and 13. Let's see, yeah. So here we are, 13,000. S2 is 13. Let me get to the right number. Hang on. Yeah, 13,079 is S2. So we almost printed the S2, and that's typically what happens when we get an RXT sell signal. So, so let's go to, let's go, this is the weekly. Let's go out to the monthly and slow down the frequency that I was talking about. So on the NASDAQ, that number is 11,232 is the 10-month moving average. That would be your target. Last month's close, this will be interesting for the NASDAQ since we're just a couple days out from the final day of the month, is last month's close was 12,885. So if we close below that number, we would have a mini reversal. But if we close anywhere close down to the S2 number, 12,306, that's going to be an outright reversal on a monthly basis, which could set up for a monthly consolidation, at least down to this 10-period moving average, 11,232, possibly setting up a high-level consolidation at that level. Okay, so let's go ahead. One of the things I want to bring up, and I've talked a lot about this over a while, this is the Russell relationship that I've been talking about. And this spread, I've been telling you for the last week or so, I think it's stalling out. I think this play is over for short term. So I've suggested, maybe taking this off. If you had it on, it was a great trade. I suggested it back in July, the very first time, and it's played out pretty good. I think there's going to be, with all this consolidation, maybe from a spread relationship standpoint, it will hold together that the Russell won't go down as much as the NASDAQ, but this has been a really good play, and I just don't see the upward juice in this trade anymore. It's really flattened out quite a bit. So I just wanted to bring that up from that standpoint. All right, so yeah, I'm just reading some comments here to see what you folks are talking about. Bear with me one second. Okay. So let's go through the spectrum that I usually go through. We've covered most of this, the Russell, and yeah, thanks, Scott. You're doing a great job, man. Well trained. Yeah, let's take a. This is a thing I wanted to bring up. I want you to see these numbers. Right now, We're at 10,609 on the volume. And it's interesting that when markets get toward a high or a low, volume expands. Most people think higher volume with higher prices means more higher prices. That is not even close to being right from that standpoint. Hang on. What really is happening here from a volume standpoint is volume tends to be climactic, and basically what we've been seeing over this rally, and this is monthly over the last several months as this market's been moving up, we're getting into a climactic phase of the markets. Let me go back and let's just look at the dailies real quick because I want you to see that. So if you look at these daily spikes that are on the screen here, you have to realize that most of the volume, about 40% of the volume, is going to come in the next hour, and especially in the last half hour. So what we're going to see here is this probably spike I said earlier, probably 12 to 14 billion shares traded today. It's already up 24.58%. And this thing is likely to be like throwing red meat, bloody red meat in a shark tank. Okay, this is starting to look, we're seeing some things start to really kick up on here. So bear with me just 1 second here. So I'm putting the VIX up. Seems only logical to go from the volume to the VIX. We're seeing this big spike in the VIX, and chances are if we put a model on this thing, yeah, so we definitely have seen this spike in here, and it's likely to continue as far as it goes. We're seeing it just about to take out, what was the high here? 31.46. The high today, 31.61. So we've taken that out, and possibly we're going to see this thing maybe spike a bit higher, maybe toward some of these other highs between 36 and 39 on the VIX is likely if this thing, and it all is going to come down, and we're going to get to hang out together and watch this. And you're going to see something really, I think we're going to see something really interesting today, and we're going to get an insight to what's likely to happen. Now, the S&P is still down at 56 handle. The NASDAQ is 13,309, down 316, and we're down 584. So we'll see what kind of action we're likely to get from this as we go forward. So let's flip over. Let's look at the interest rates. Actually, let me just take something off here. So I talked about this thing coming down. This is the daily 10-year. It's starting to decline. I've talked about this probably last week when I covered in detail the 10-year, that the low water mark is going to be about 0.95, and we should stay between roughly 1% and about 1.4, 1.5%. When we started this decline, this looks like where it's setting up. Let me just go over to a weekly pattern here just so we can take a look at that. You'll see this pattern a little better on the weekly. Let me bring this tab in so you can see this. But we're looking at around 1.06. Let me just get this up here. The high end is 1.18, and the low is going to be around 0.99, 0.95. 0.966 is the market grid extreme for the weekly. And this is just now going to go into a sideways range, and we're going to probably, like I said, we're going to see it spike. Potentially, we could go down to the 21 period moving average at 0.87. I don't see that happening at the moment, but we could see that happen for sure. It's part of the pattern, but overall, we're going to see things continue to go higher. Yields, the prices on bonds to go higher, and yields to go slightly lower, at least maybe another 0.3, 0.40. When we look at the monthly, that's where we slow down that frequency and go to look at. I talked about this literally a couple months ago that I thought we would get up to the 21-month moving average. We did. That was at 1.21. The high during that period of time was 1.18. So we got very close to it. We reversed off of there. Now we're back into the grid, and this also shows that 0.96 and S1 is 0.87. That would be an extreme as far as this pattern goes right now. I guess only logical we'll go to the Dow next, and I want to keep grinding through this stuff. I'll tell you what I'll do today. I know we started a little later. When we finish, I'm just going to do a couple more markets, and then maybe we'll do some individual stocks. Don't give them to me yet because they'll get lost on the chat line. So just wait a few minutes. But what we're seeing here on the Dow is, and I talked about this as well, that we printed down. When we printed down to that 89 handle, this is probably the low of the Dow, and we're going to continue to see it move higher. Did have a couple cycle events come in about 3 or 4 days ago. This is daily, but let's go out to the weekly so we can get a better perspective. Weekly, we're trying to get above this 10 period moving average at 90.54, last 90.57. So we're trading right at it. Let me just fix something here. The PPM1 is actually trying to turn up. This is a weekly, so this suggests that we could move toward the 21-week moving average, 94.43. If you haven't been watching this channel, these PPMs are price, pressure, momentum. It gives us probabilities of what the market's going to do around moving averages, whether it will hold, penetrate, or whether it's telling us that it's going to go to the next level. In this case, with the expansion that we're seeing in PPM2 and PPM1, it tells us that if we can close above that 10-week moving average, 90.53, we're trading right there right now. If we get above that, then the next level it will move toward will be the 91, 95 level. So we'll continue to see some expansion on the upside there, which we already know, and I'll cover. I'll go to gold next because that's the natural sequence of events. So interest rates, Dow, and then gold, and then we'll cover Bitcoin, and then I want to talk about some other things. Let's go ahead and take a quick look at the monthly graph on this. And PPMs are still very negative, so the secular trend is still down in the Dow, but that doesn't mean it won't bottom here. I talked about this before. The extreme expectation was for a move down to the 86 handle, actually 87, 86, 88 was the number to look at. And with the moving averages down as hard as they are, the restrictions will be that somewhere around 92 to 94 is going to be the upside on the Dow. So There's not any big bull market starting to unfold or anything like that. But there is a intermediate short-term bottom starting to form that's going to suggest maybe a 4 to 6% increase in the dollar. But it's interesting. We're seeing the S&P trying to rally here. It's rallied about 6 handles. We'll get focused on that here in just a few minutes. Okay. Let's go to gold. Gold's down about 11 bucks. I mentioned in last night's video, this thing is in a little bit of trouble short term. We're looking at it moving down toward the lower end of the range. It printed down to the 1804 level. I think there's another low here. Yeah, that was the number I was watching in this pattern. The extreme for today on the market grid is 1831. We printed 1832, so we went to the STX number, which is the extreme projection for today's range. If we go over to the weekly, this is where we're going to find some interesting things to talk about. Is we traded up. The high so far this week has been 1870. We had a couple numbers, a cluster of numbers. R1 was 1880. We also had 1888 was the 21 period moving average. 1874 was the 40-week moving average. So these are resistance points primarily because we have negative or flat PPMs on those averages, which tells us that's going to be resistance trading underneath this. Now we did have a monthly cycle hit. So this is a big event, which I'll be watching as we go forward, and I'll be talking about this on the channel because I cover gold every day. And this is something we're going to be watching from a cyclic viewpoint. And typically when I get these signals, these are Fibonacci cluster signals, which means there's at least 3 or more Fibonacci projections, cycle projections hitting at this point when these dots come up. This is the warning dot, so the actual next dots are the actual cycle. So I get a 1 month, so what it tells us is that February is the cycle period that we need to watch for. Typically with the prices down like this, it's going to be a bottoming cycle. I'm still on a longer term basis, still see some positives here for gold. There's just a lot of things that have to be sorted out on this planet at the moment. Okay, so I'm going to go to Bitcoin next, and there's a number of things that I want to talk about on Bitcoin. If you noticed, one of the very first comments that Janet Yellen made was that this market needs to be regulated. Because it went to 40,000, because the valuation went to this magical trillion mark, it's becoming legitimate, and all of the trolls out there on Bitcoin are going to be, I think, very disappointed. This volatility that we're seeing is pretty much in line with expectations from my viewpoint. I mentioned, I think in a video, I covered it 2 nights ago maybe. Everything kind of gets blended together when I'm doing this stuff. But I'm thinking, I'm thinking that the extreme for, this is daily, the extreme for today is 29,149, the low 29,239. So it's staying within the grid. The 40-day moving average is 30,047. We're trading back above that number. So we're starting to rebound. My expectations is for this grid to stay sideways and start to go on. If you subscribe to the market grid, you get these numbers every day, so you know where they are. But if we go out to a weekly basis, now this is where the money's going to be made. If you absolutely get a chance, 27,561 is the 10-week moving average. If you can buy anything close to that, you're going to see a nice bounce. My expectation is, though, with the market grid expanding like it is, like I said earlier, if you're watching, that the market grid actually is a calculation based on volatility, and it's a smooth volatility between a combination of 3 and 5 bar, and then it looks at what the volatility is, that runs some Fibonacci calculations and comes up with daily, weekly, and monthly ranges. And what this does, it gives you some really good points to trade off of. If you look at some of the numbers, like if we look at last week, the high was 37,850 and 37,664 was R1, so it traded just above R1. On the downside, 28,810. We did see it traded just below S2. Typically, Bitcoin doesn't seem to adhere as good as the S&P and some of the more liquid markets from the standpoint that aren't trading 24 hours. So this range is pretty darn close, though. So in this case, if we look at this week's market grid, if that's what comes into that line where we're looking at the S2 number, 27,914, somewhere between, let's just call it around 28,000 to the 10-period moving average, 27,585. That's going to be the range where you're going to be able to play out of here. Now, the one thing that is happening is that PPMs are rolling over pretty good. All that tells us is we're going to be in a monster trading range, okay? So this volatility that you see, this high line, let me just draw in a couple lines to make sure we all are looking at the same point. So this line up here, these two lines here, this is the volatility range that's being projected. Right now it's huge. This is going to contract. When this updates on Monday, this volatility is going to contract. But what it's going to set up, if you've watched the channel for a while, you know I talk a lot about these dragon heads. This is going to set up a dragon head. So we're looking at, this is weekly, we're looking at probably at least 8, 12 weeks or more of the market being in a volatility range, setting up a pattern. And the characteristic of when I talk about these dragon heads, the characteristic of these dragon heads are I'll usually resolve themselves to the previous trend, to the upside. Yeah, I know. I know, it's pretty funny. I used to call it a horse head. I just thought dragons sounded better because they look more like dragon heads. So, but the dragon heads are good because they suggest that after the consolidation, you're going to see higher prices. We had them on Tesla. I've talked about this over months. We had this stuff. It's different. Like if you've used Bollinger Bands, I've always had I've been somewhat of a critic of Bollinger Bands, and even to John's face, I know John. There's a lot of characteristics, and I think like anything, like my work, his work, there's others out there. If you get to the point where you're actually study something enough, you understand the characteristics of, I call the Bollinger bubble patterns and things of that sort. So there's a lot of good rules around that. So I'm not criticizing. They're just different, and I want everybody to know that they're different. And there's some very specific rules that I put out on this channel all the time that you should be able to do it. Yeah. So anyway, you gotta have some fun, right? I've got some other patterns. I keep threatening everybody that one day we're going to go into talking about more stuff. We are now printing back at 3750, down 100 on the S&P, down 371 on the Qs, which is awesome. Mainly because I own SQs. They're up 9% right now. This is really, really nice. I like it. But the bottom line is that we're seeing this on Bitcoin. We're going to see this large consolidation, and we're going to go out. There's not as much data here, but we've expanded this thing, this rally. Yeah, this isn't even worth looking at. I'm not even going to try to talk about that. It's just not. It's not a viable chart. But anyway, this is what my expectation is for all this stuff. Yeah, and James Love, that's exactly what I said. You buy this thing 28 less, I would push it a little lower than just 30. But if you see 28.5, 27.5, it's do I use Elliott Wave and Fibs though? Yeah, yes I do, Christoph. Absolutely. It's part of the analysis. I don't get into hardcore wave counts. Once in a while I'll bring them up. More interested. In fact, many people know that I'm like a big critic of I hate trend lines and the typical patterns that you see, Trading View, and they're putting all these patterns out. That's really, they're important to understand, but the ability which to calculate and anticipate these views, in my opinion, are more, and that's what the PPMs do and things of that sort. So, so Tim Whitaker, I don't think you're not a wave tech guy. I'm going to show you guys something here. I'm going to bring it up on the other screen. I'll bring it up once it starts up. And so just for the record, people are always talking about, and I've heard this for years and years, is, well, that stock's going up or this thing is happening just because of short covering, right? Well, listen, if you own it, do you really care what the reason is? I don't. So I looked at some of these stocks, and I actually I put out on my Twitter account yesterday, I put out that, I want to, I'm watching GME on our system. We actually bought it at $20. The last daily signal, we bought it at 20. We're still long. I want to see how this thing gets out if you just let it go. I mean, I didn't think it'd be at 300 today. So, but the intermediate, we own GME at $4.25. So, and it's still long. It's going to be interesting. I just want to watch this as a case of running things, and I'm going to propose something today because I know a lot of you folks already know these numbers. I know we're getting close to about 700 folks live on the channel right now. So just give me a second, and I'm going to bring up some stuff for you. Bear with me. I'm just putting something up on the other screen. Okay, so here we go. I'm just bringing up our Portfolio Expert platform, and this is the weekly graph here. So we had a lot of, this is the history going back on this, and we're looking at here's the buy where my cursor is right here, and this only reflects, this chart only updates on a weekly basis, so this only shows that it's 75. We know it's at a much different number right now. In fact, I'll bring this up in a minute on TradeStation as well, but I just want you to see where the signals came in. And if we go here and we optimize daily, now what it's going to show us is, and let me just narrow this down to the last year. So last time it bought was at 20. This reflects it at yesterday's close. This platform's an end of day platform. So what's going to happen is it's going to issue a sell signal at some stage. And I'm anxious to see exactly what it looks like. This is just this is a weekly GME chart, right? Because of this range, 338 up 128% today. But let's put, yeah. So you see where the signals are, and I looked at AMC. I looked at some of these. We own all these stocks, so you know, like I said a minute ago, do you really care why it's going up? If you decided to buy something, do you care if it's short covering? You know, it really doesn't matter from that standpoint. Yeah, so okay, so let's move on to some more charts. Let's do this. Let me get back on the channel so I can see what you folks are talking about there. Yeah, you know, I've seen a bunch of these squeeze jobs over the years, right? And you know, if you get in on one, man, it's amazing. So I guess one of the things that be kind of interesting to do, and this is what I want to put out to you guys. I see you starting to give me some stocks. Here's what I want to put out. So slow up for a minute, okay? We'll get through all the mainstream stuff. But what if we, if anybody out there knows like stocks that have been like that we know are heavily shorted, let me know. I'm going to build a portfolio, and I'll put it out on the channel. I want to build a portfolio of all these stocks that are short candidates that could blow up, and just see if we can find a way to catch this stuff. And those of you that are the Wave Tech guys, that's good to go. Unfortunately, we're 3 days to go into the month. We actually prorate it so you can actually sign up for about $10-12 for the next 3 days. You can go in and sign up. I'm going to put on the I'm just putting this screen up right now, so if you do want to do that, go to Kendall Report/WaveTech, and you can sign up, and you can cancel the first of the month. It's $3.18 a day, so you can do that. But it'd be kind of interesting. So tell me, yeah, exactly. Yeah, I think GME is heavily shorted. So yeah, let me write down some of these stocks. I know you folks are going to want to see some of these things. But let's just focus for a minute. Yeah, it'll be interesting. How many of you folks watched my? I was somewhat disappointed, I guess, on my Kathy Wood videos. How many of you watched those? Because I think there's something really interesting. I'm working on another project on stuff. So yeah, okay, there you go. Thank you, Anna. But I need symbols, man. BlackBerry, Nokia, Macy's, all short. Give me symbols. Yeah, I just want the ones that everybody knows, that the folks that are playing these things, what's happening in these hedge funds are making these big bets that these things are going to zero, right? Because of COVID, because of whatever. Yeah. Okay, cool. No, listen, I'm going to be doing a whole series. What I want to teach you folks to do, okay? And yes, this you can't do it without the product, but I'm going to teach all you folks how to be ETF hackers and mutual fund hackers, because these people spend a lot of money in trying to figure out what symbols to put into their portfolios. And I'll show you through multivariate trading where you can blow this up. When I was talking to one of our clients overseas, they took what I did in the and I mentioned in the Kathy Wood video, is that you could make that so much better. I literally did that video. It was live. I edited out a few things and just put it up there, and that was that, right? But the bottom line is, you people don't know probably this about videos, but a 15-minute video to edit it and get it in production ready, and I'm not even good, I do all my own editing, takes about an hour and a half to 2 hours. So a lot of times I start with somewhere around 20, 25 minutes of raw data. It ends up to be 15, and that's like 3 hours. So it's pretty intense. Yeah, Brian, that's exactly, need a 401 hack. That's exactly it. Matter of fact, we're working on a project that we're going to show you folks that have private, have company 401ks, how you can get your 401k moved to a private brokerage account. That's U.S. only for the most part, as far as I know. But we're working on a number of things like that, because that's what it's about, to be able to do this stuff in there. We are doing our training meetings with WaveTech now. They're private. We're not doing them public anymore, because we've got so many people actually running real money, talking about, even in a small community, it gets kind of hard. We've got people running some pretty substantial family money and other types of things that are going on. So this is important. But yeah, this is, I'm going to teach you folks how to do this, and it's powerful. And I've made this comment forever and ever as far as things go. I've made this comment forever and ever. I thought I was on screen, but I made this comment forever and ever. If you use this product right, it's free. I mean, it pays for itself, hands down. And I just want to do this thing, because you folks supporting this project is going to give us the ability. We're building a brand new web app that's going to be insanely cool, that's going to be able to do all these things that I've been working on for 20 some years. So yeah, so yeah, so that's cool, Scott Sanders. Did you do that with WaveTech? Anyway, that would be awesome. We've got a lot of people that have done really, really good stuff. So anyway, all right, back to the final parts of this, end of this market day here. Yeah, wow. What took my eye off the ball, we are printing through 37. We're 33, S&P down 116. We're looking at 429 in a composite, 717. Do we have a 1,000? Yeah, that's pretty insane what's going on. We're about to make a new low on the futures here. We're printing 24, and this is pretty close to a panic selling. So our good old friend at the Fed, they got to, yeah, they got to be wondering what they're doing. When you get, I'm going to go back to this other screen here, folks. When we get this type of volume, here we are at almost 12 billion shares, 11.8, right? This is a huge, huge number. When you get this kind of volume, this is something that I have talked about a lot for. Let me get this down minimum here. This is something I've talked about for a long time. is you can be the Federal Reserve, you can be the government, and the only thing that makes any of this shit work that we play with every day is that we believe in it. And if the system starts to become so broken in so many ways that people stop believing in it. But you're looking at what's going on with Reddit. You're looking at what's going on with all these blog sites that are hyping these stocks. Hey, it's all fair game. There's nothing illegal with that. If I can, if someone can get out there and say, hey, you guys should all buy this, and everybody buys it, that's it. I saw a little segment when I was getting ready for the show on CNBC. And they're trying now, listen to this, they're trying now to make the Robinhood traders and Reddit and all these guys as some kind of financial terrorist. That's what's going on. So, think about that for a few minutes. So anything that's disrupting when us people decide to go in one direction or another, now all of a sudden, that's becoming an issue. This is a crazy, crazy world we're living in, folks. I've talked a lot on the channel about the MMT strategy, all of that stuff. That's still in play. Don't think that's over at all. That's still in play, and this is. If you thought 2020 was crazy and exciting, I don't think you're going to be able to compare it to 2021. So, yeah. So anyway, sorry, just get things coming up on my phone here. Everything's going crazy. But yeah, so yeah, you're going to see some crazy, crazy stuff here. Yeah. Why did you decide the model did it? It just looks at the probabilities. That's what, I talk about fundamentals. I get criticized. Hey, earnings don't matter, fundamentals don't matter. Well, they do, because that people do read it. Why don't, if that's the case, then the company should just stop reporting earnings and all that. No, it does matter. It does affect market sentiment. It still has an effect. Now, when you get into stocks like GME and stuff like that, that's not what's going on at all. That stuff is not fundamental based, right? It's technically based, and that's the crowd that's getting in there. So, yeah, so let's see here. Where are we at here now? We're down 110.39, so we're trying to bounce above that number. That's a big number if we close under there today. Sorry, I'm just I've got, where I'm at right now, there's 6 to 8 inches of snow on the ground, and I'm having allergy attacks. You would think that somehow that wouldn't work that way. So I apologize for that. Excuse me 1 second. Thanks, everyone. Yeah, I'm just really, really struggling trying to keep going here. Yeah, so let me go over to this other page here. Let's go back to and watch the stocks change. I'll tell you what, I'll still do some stocks here before I leave today, but there's just so much going on in the market today. It's tough to move around. But here we are approaching 12 billion shares traded, and we are right now, this is what, up 40% the volume today. And this is somewhat of a capitulation, you would think, right? But we'll have to see how this plays out. And now here we are over 12 billion. My guess is we're about 15 minutes to the close, that in the last 10 minutes, you're probably going to see this thing volume up maybe 60, maybe 70% from where it was. This is on a weekly basis, okay? So this is big. Let's go to a daily real quick. Yeah, you'll see this is the highest volume going back to 12/18. This is the highest volume. If we go way back to 9/18, that's interesting. 18 number showing up. This was the last time we had a big spike. So this is definitely a big deal. We're seeing some acceleration on all of these metrics right now. So we're seeing just a little bit of a bounce here on the futures. Okay, folks. Sorry for the delays. Anyway, yeah, so I still want to, I still would like, so hold back some of these stock ideas and stuff. Yeah, buy the dip, yeah. You know, as I mentioned earlier when I covered the S&P, watch the rebroadcast if you missed that. And, you know, there are some very significant numbers at these levels right here. 37 is one of the number. Now trading 41 on the futures. So they're trying to bounce them here. There's a little bit of a bounce going on. So we're definitely seeing this thing trying to bounce here. We'll see how far it can get. But the cash is at 43. The key number on the cash is 37. We're trading below that number. Let's go over to the S&P futures. I just want to see what that, yeah, see, we traded a little while ago. I talked about us going down to 40 period moving average. We've already done that, which is the 10 week. So when we go over to that level, that's right now the 40-day moving average, let me get this right, 37.29, the low 37.23, last trade 37.34. So I'm really just shocked that we've been able to accelerate here, but this is how this thing goes. So let's talk about something I think that is important to talk about. Is what we're seeing here is the markets are getting broken. At what level are they being broken? Are they being broken just on a short term? I talked about this in the last 3 sessions. We've seen over 3,500 sell signals come out of our database. I suspect tonight is going to be a complete puke job, okay? It's just, there's going to be maybe 5,000 just today, potentially. There's so much stuff getting broken. This is a short-term models. Intermediate models, we won't find out anything until Friday, but if we see this market close into Friday, stay at these levels or lower, then we're going to see massive reversal. Last week, our database printed up to 81% long, and I mentioned that it's from a bullish percent viewpoint. It's about as bullish as it gets. In fact, it's probably overdone. From a holding period viewpoint, it's still got a long ways to go, which tells us that many of those stocks, I won't bring up the database right now, but many of those stocks, there's around 13,000 plus of them, are in trending mode. Many of those stocks are going to continue to move forward and actually see prices move, higher over the next 3 to 6 months. On a short-term basis, for sure this thing's getting broken. It's just a matter of how far. Now we're already printing 37.48 on the cash. I'm telling you, you don't want to close under 37.37, 37.35 level. that would be disastrous. So the way we're setting up right now, looks like we're definitely going to be looking at a negative close, but not a triggering negative close, which would be a close under that number. And even then, that 37.37 number isn't important until Friday. So if we close under 37.37 on the cash, it's 37.45 right now. On Friday, which I'll cover on the channel, so watch the videos for the next couple days. If we close under those levels, then you're going to see this thing accelerate more to the downside. So we're going to know a lot by the time Friday's closes here. And then, of course, on Sunday night's video, when I do the update on Sunday night, I'll bring whatever perspective is necessary. But we're looking at right now the futures down 2.7%, and we're looking at the Dow Jones down 2.08. The Russell's still faring a little better, only down 1.8, so that has relative strength is still there, and 2.89 on NASDAQ futures right now. So these are all really big numbers. We got about 10 minutes to go here. Yeah, we'll have to see. I see Three Kings Media. NASDAQ gap just filled by the dip. That's a good comment, James Love. Fear of losing money or fear of missing out? We'll find out which one, right? Yeah. That's true. We've got a lot of earnings stuff to come out. We've got Tesla, Apple, Facebook. We got a ton of stuff coming out right after the close. So it looks like we're stalling just a little bit around 37.48, about 10 handles above that 37.37 number. I really didn't think we'd be talking about that until the next couple of days. Yeah, I'm just looking at some of the chats, and we'll definitely do some stocks after this, folks. We're just gonna hang out, watch this market action. It's too significant not to watch it, and this is a big part of me and what I watch every day. So this is one of the times that we want to hang out and just watch, and I'll try to comment on some things that's going on, and we'll just see how everything plays out as we go into this close. As everybody knows, I always talk about the last 2 minutes of the cash trading session with the futures, and then the 2 minutes afterwards. We'll see if anyone wants to, if there's any short covering to come in after this. We're trading 48 on the cash right now, 48.08, 35, 40, 49.43. So we're definitely seeing some strength coming in. You can see on the futures chart, it's moving up a little bit here. Trading 42s, the low so far has been 23. So we're 20 handles off the lows right now. So, you know, we got pretty extreme, but the truth will be in the next few minutes. What time we got? We got about 6.5 minutes to go. So this is worth hanging out and watching. I'm just kind of looking at some of the, yeah, I think the time to short the S&P was not today. Somebody's asking time to short it. Yeah, this is a tough sale here if you didn't do something earlier that's going to be a tough one to do. Yeah, the SQ is pretty cheap relative to what's going on, but yeah, I'm just looking at some of the timeline here. Where are we at? 51 now on the cash. So we're a long ways from 37. We're working on a decent little comeback rally here. Looks like there's a decent bid coming in at the moment. So we'll see how things actually play out into the close, into that last couple minutes. We're now about 5 minutes and change into the close. So we're 52 on the cash. So it doesn't look like we're going to have to worry about that close. It looks like there's definitely some covering up going here as far as the pattern goes. But we'll see. Like I said, for me, the last couple minutes, we're going to see if there's any short covering. And what happens is when people talk about the smart money in the markets and what they're doing, or I'm not sure there's any smart money, but there's a lot of money, ETFs, and people that need to rebalance their ETFs, mutual funds, all of that. And that's the orders that we're about to see come in. We're looking at about 3.5 minutes. So another minute and a half, we'll start to see this. We're now trading 55 on cash, 56. Looks like almost 55.95. So we're definitely printing up. You're seeing the futures on the screen continue to move higher. There's definitely some short covering coming into this final couple minutes. So we'll see what this for me is where the money's made and gives you a lot of insight. And I've been talking about this forever. So Samantha, CNBC's going nuts. What are they saying? Share with us, please. But yeah, so we're looking at 55, stalled pretty much at the 56 level. We're about to go to the last 2 minutes right now. So we're printing 47s. Let's see what kind of action we get coming in this last couple minutes. Yeah, Brian Betts, when would I buy back into the S&P? I would just say watch the channel, be watching that. This is pretty significant that we traded down. We're seeing some selling come in, some light selling. Here we are actually we haven't hit the 2 minute mark just yet. But we are seeing some selling coming back in now. S&P cash trades 51. It traded 55.95 is the high print I saw, and I wasn't watching it every tick, but that's pretty close. Yeah, I'm going to flash over. This is the in that final 2 minute period. We're kind of stable here above 42. That final minute is what we're going to watch the range and see how we print there. We're back at 52.15 on the cash. Okay, well, it's final minute, folks. Here we go. We're seeing some pretty good selling come in. So far, low 41, I think. 41.75, 41.50, new low. 40.50. So we're definitely seeing some selling come in here on the close. This is where they're selling futures ahead of, they're selling the cash individual stocks, things in their portfolios. So far, the low print has been 40.25, back to 42.75, 43.70, 45. 47, 48. There we go. There's the bell. 49 on the bell. So a bunch of buying coming in. Now we're just going to watch a minute or so of this. We traded all the way up to 55. Cash markets went out at 50, but we're seeing some futures cover up here. Yeah, so you can see the short covering going on in the futures at the moment. We traded the high print so far has been 54.75. There we are again, trying to print it up. There's a decent offer. There we go, man. They're just definitely a lot of short covering coming in. 56.75. The high print so far in this first minute after is $56.75. So that was probably it. We're in the second minute after. So thanks for watching that with me. That's like the critical thing that I'm really disappointed when I don't get a chance to actually watch what we just watched together. This is, there's some things on. So let's go ahead and let's dig in some stocks. I'll do a couple stocks. I know some of the new stocks, Boeing was one of those that are out there. And I see some comments on BA. And it actually was down almost 4% today. Let's go to the weekly because we're not going to see a lot there as far as that goes. Yeah, so a pretty wild day. Where did our volume end up? I just want to 13,489. So pretty good guess. An hour and a half ago at 14 billion. There's still some runoff coming, so we'll probably get to 14. It's 846.52. So yeah, it's going to be real close to that number. As far as just the futures are back at 44. So we printed. I got to go back there. I'm sorry. This is pretty significant. So we printed all the way up to 50. What did I say? 37, 56, 75. Now we're back at 41. So there was some short covering, and typically what happens there, folks, just so you understand what goes on every day at the close, is that all of the institutional money starts to get squared up in that last couple minutes. Usually last 10 minutes, and it gets really intense at the close. If you watch a level 2 volume, what you'll see is the bid and ask sides on both sides just really inflate to a large level, maybe 4 or 5 times what it was trading in normal market conditions. So they're squaring up those positions, and then afterwards they look and see what kind of fills they got. This is all electronically done now. This used to be somewhat of a manual process with a man in the middle or person in the middle. Now it's just all electronically reconciled. And so as soon as they see that what the reconciliation process is, then they're even going to buy or sell futures back that they sold into the close. So it looked like there was some selling coming into the close, some cover up afterwards. So that means they got most of the fills that they needed on the stocks to balance the ETFs and the mutual funds and other types of strategies that get balanced at the end of the day. So once that's all done, then it's back to business, and that's why we're seeing this thing trade back to 43 on that. So yeah, so the end, all those little cliches, how January goes, so does the year, all that stuff. I mean, I don't know. I've been hearing that stuff for a long time. I've never paid much attention to it. Some years it works. It's sort of like the Super Bowl indicator, right? So let's, and I covered that a bit, right? So if we go just for a minute, go to SPX. So the last monthly close on SPX for December was 37.60. So we're actually below it right now. So we'll see how it plays out. I did a lot of coverage on that earlier. All right, let's hit let's go back and go to weekly. I'm going to go through as many stocks as I can here, and then we'll bail out of here. So BA is down on its extreme 192.97, the low 91.85, close 94. So we went down to STX weekly. The pattern, we've still got support 189.57, 178. But this is a tough pattern. I talked about these over the last several weeks. I still think there's a pretty strong chance of getting back toward that 200 moving average. It's 200 week moving average, which is at 286. All right. Yeah. So Facebook. Let's do something here. Yeah, I was just trying to figure out if we could get to the live. See if here's Facebook, down 244, Tesla up 1.14. You guys can see all this on the screen. So this is what the aftermarket stuff that just came out. So there you have that. So no big surprises on this. So I'm still looking at this T volume, which is total volume is 14 billion 036. So we did hit that 14 billion number, and you see this huge spike. And as we start to go, just real quick, this volume is a big deal. This is the weekly. If we go over and look at a monthly volume, you can see this month was the highest volume in the history of the markets. And it goes to, if you were on the broadcast earlier, when I was talking about the podcast I will release on my channel later today. I'll put that out there. It's 7 minutes, but I was talking about what was going to happen with volume and how market participation would get really crazy going forward. It wasn't based on COVID, okay? It was based on that actual conversation happened I believe it actually happened in late December, mid to late December, and then I just put it in a podcast. I posted on another channel that I have that's just as a private video. So I'll share that out to you. I think it's worth listening to. It's 7 minutes. It's kind of a perspective, and it goes to, if you listen to what I said earlier today and what some of the things that are likely to happen from the market configuration and what's going on here, we're going to see a continued expansion of all of this stuff that's going on from the standpoint of of market volume, participation levels, everything. And I said this earlier, is that the fintech is going to be the place to pay attention. I believe ultimately I wouldn't want to be maybe the major money center banks are okay, but a lot of these little regional banks and things are, I think they're going to get sucked up, and no one's going to be walking into a bank branch very much in the future. Everything's going to be an app of some sort. So we'll see if that comes true. So there's definitely some things going on. So yeah, so let's go back. Surprised they don't have. Yeah, here's Facebook. I don't see any Apple stuff on here.
The forecast was for 320.
Here we go. Yeah, I don't see the Apple down. Let's take a look, and I can bring Apple up, I think, and see if we can see what's going on there. Yeah, Apple's down 360 in aftermarket here. I don't have this charting. I have these charts set up so they're just primary. So we're down 3.5%. So yeah. Yeah, so much for all of the hype that we continue to see around the markets, right? This is exactly, what happens at these levels. I'm so anxious to see the output from our database tonight. I can't even tell you from that standpoint. It's pretty exciting to see what type of liquidation we're going to get on a short-term basis. And as I mentioned earlier, depending on how this thing ends up, that's going to impact a lot of things from our intermediate database and so forth. So Tesla's down 9% right now, just bringing up a couple of these. So we are definitely seeing this thing tank. I'm trying to remember. I don't know if any of you folks know this. I saw it and I thought I would put it to memory, and I obviously didn't. But I forget what 1% in Tesla, I think, is $10 in the S&P. There was some ratio that was out there, and yeah. So let's go back to. Yeah, there's a lot going on here today. It's hard to stay focused. Yeah, Apple down 367, low. Yeah, so I don't show the high lows that I show on this aren't reflecting the aftermarket trading. So we can just look at the real-time quotes here, but those are all good. And then Facebook down 8%. Yeah, so yeah. So I'm just kind of winding down here, folks, as far as this session goes. I really appreciate everything. I know we didn't get through a lot of individual stocks. It's just really difficult to try to stay focused with all these moving pieces that were going on today. So I think that there is some significant things happen. I would tell you, if you're a subscriber to the channel, then awesome. Make sure you watch the videos over the next couple of days. I think they're going to be significant from the output of our database. Those of you that don't know, we actually run quant on roughly 16,500 symbols. And we have short-term models, which update every day on patterns, and then intermediate and secular models as well. So we're really deep into the quant world as far as monitoring trends on all the levels and things that I talked about on live stream today, and things that I do on my daily videos. Yeah, so let's see here. I'm just looking. Yeah, thanks, Scott. That's a good comment there. Yeah, I just yeah, hopefully, and I know I see, you know, I want to thank all you folks because the channel is amazing. Uh, I think for the most part, we're above, I think on an overall channel, we're above 97%, thumbs up. So if you haven't done that, give me a thumbs up, a like, whatever, and subscribe if you haven't, because I think the next few days are going to be very significant in what's coming out of our database and things that I'm going to be seeing that are likely to come out of this pattern. And, that's going to be, yeah, just watch the videos. I'm doing my best to maintain everything right now, so that is definitely going on. And I really appreciate everything. We're trying to figure out how to build a community. So tell your friends. Let's build this up. We've kind of our growth is kind of stalled here a little bit. People got got very distracted with what's going on in the world and all that stuff. So yeah. So yeah. Thanks. I am Uncle Bob to a lot of people, so that's a good thing. Thank you. I really appreciate it. But yeah, just make sure that you subscribe and like the channel and pay attention in the next period of time. I think it's going to be interesting going forward as we come into the annual event, which is going to be the anniversary of last year's decline. I think folks are going to see some things very interesting, and I think it's so, yeah, I just think it's amazing that we're seeing all these selling again. This was exactly what we saw happen last year and this week's run. So if anything you do, make sure you watch Sunday night's video, because that's going to be really a significant video from that standpoint. Yeah, so anyway, I think I'm going to call it quits. I really appreciate it. I'm really trying to keep everything down. I've got to condense some of the content on the channel. You never know whether you're going to see this camera view or my other camera view or whatever right now. Just trying to get things done the best I can. So really appreciate everybody watching. Have a great afternoon, and I will be talking to you very soon, like tonight's video. Oh, twice.
Your call has been for.
No idea.
Hello,
Hey, what's up?
can you hear me? You're
Still live.